Despite the economic slump, the latest PwC Mine report reveals the world's top 40 mining companies performed well above expectation. Their market cap rose to achieve joint growth of nearly $900 billion US. Assurance partner at PwC and Andries Rossouw joins us now to unpack that. Andries, thanks so much for your time today. This is good news given what we've just seen with the GDP data and how our mining sector has been quite a drag. But this looks at the top 40 mining companies around the world, right?
Yeah, so the top 40 mining companies globally had a phenomenal year. I mean, revenue up by 23%, EBITDA up by 38%, net profit more than doubled. Tax payments to governments more than 67% up. So it's been a good year.
Why?
In the main, because commodity prices rose nicely in dollar terms over the last 12 months, and we've seen significant increases in those. But mining companies have taken responsibility over the last 2 years really to start cutting costs, manage unit costs, and that started to pay off last year already on the profit line, and it certainly came through this year with the higher profits. And
their balance sheets, are they quite strong?
Balance sheets now replaced and recovered. Last year there was still some lingering liquidity concerns, but debt to EBITDA down to 1.5 times. The gearing ratio down to 31%, which is in line with the long-term average. So really strong and ready for long-term growth.
Okay. Are there specific metals, are there specific sectors within the mining sector itself where things are going better than in others?
Yeah, so this year's performance was certainly impacted by better prices on the coal, iron ore and copper.
Okay.
Looking forward, there's certainly more optimism on the copper side of things, and we've seen deals and new projects coming on stream on the copper side of things. So those are the commodities doing well. And unfortunately for our country, and that's part of our Q1 problems that we've just seen, precious metals are not doing well. Gold has been very stagnant, and platinum has actually decreased in rand terms as well. That's why our local environment is perhaps not seeing the same benefits.
Okay. Globally, when you look at capital expenditure, what sort of expectations have you got going forward, given that they've done the cost savings, they've cleaned up their balance sheets, the prices are looking a little bit better, and the global economy is expected to recover? Could we see them spending some money?
Well, we're certainly hoping so. I mean, capital expenditure this year was at the 10-year low still. We think there was a lot of sustaining capex that's left behind. Mining companies went into harvesting mode when prices were low, and there's certainly a backlog of that sustaining capital expenditure. So we do estimate that next year capital expenditure will go up nicely. We've seen a trend where capital expenditure there's a 2-year lag from profit to either going up or down, and before that starts impacting on capital expenditure. So next year should be a good year for capital expenditure.
You've also seen new entrants into the sector.
Yeah, it was quite interesting. A number of the deals had private equity attached to it. Now, we know private equity only start investing when they see value in the medium term. Perhaps they're not the long-term players for the mining industry, but they certainly see value in the medium term. And interestingly enough, in all the Australian coal deals, and there's been a number where some companies got out of coal and others got into coal and buying those core coal assets. Private equity funded those. We've also seen that there's been a number of consumers buying into supply. So when Tesla continues buying into lithium, but we've seen Agrium buying Potash Corp in order to secure the supply of potash for its fertilizer and chemical business. And we suspect that's a good sign for long-term prices. So these consumers are starting to see that prices are going to rise, and they want to make sure they get their hands on the supply.
Right. We'll leave it there. Very interesting. Thanks for your time. Assurance partner at PwC, Andries Rossouw.